And it's November 16th, 2023, right here in Lagos. Good morning, good evening, wherever in the world you might be watching from. It's Business Morning, coming to you live from Channels HQ right here in Lagos. Let's get you the top stories that set your agenda. Now, we see Nigeria's inflation rate climbed further to 27.33% last month, up from 26.72% in September. That's according to the latest report from the National Bureau of Statistics. The figure, which is in line with projections by financial derivatives company FDC, marks the 10th consecutive month of inflationary pressure in the country. Key highlights of the data from the National Bureau of Statistics shows that food inflation, which is the main factor, rose against the previous month. Core inflation jumped 22.58%. Urban inflation rose about 29.29%, while rural inflation climbed to 25.58%. With the latest reports, the financial market now awaits the next action to be taken by the new Central Bank Monetary Policy Committee as its next meeting, which according to its calendar is scheduled for November the 20th to the 21st. We'll be waiting for an official statement from CBN for that meeting. And the Securities and Exchange Commission says it has embarked on the creation of a new e-dividend portal, which is expected to become operational on the 30th of November 2023. The Director General of the SEC, Lamido Yuguda, made this known at the Commission's ongoing Journalists Academy in Lagos, organized by the Nigerian Capital Market Institute. He explained that once operational, the portal will improve and simplify the process of mandating accounts for e-dividends, which will lead to a significant fall in unclaimed dividends. At the same time, Mr. Yuguda mentioned that the SEC aims to achieve a 50% market cap to GDP ratio target in 2026. And the House of Reps is to investigate the alleged non-remittance by NNPCL of over 34.2 billion naira to the Federation account of the Nigerian liquefied natural gas from 2004 to 2021. Honorable Sani Bala moved the motion, alleges that the money has been diverted by the NNPCL. The House has mandated its relevant committees to carry out an investigation and report back within 2 weeks. Let's get a check on the oil market now. See, oil prices fell today, extending losses from the previous session as signals of higher supply from the United States met worries about lackluster energy demand from China. Brent futures was down about 48 cents to $80.70 a barrel, while US WTI crude shed about 53 cents to $76.13 a barrel. Both benchmarks fell more than 1.5% in the prior session. WTI's front-month contract also traded below the price for the second month, a structure known as contango, suggesting that investors expect prices to increase. The front month's discount to the second month traded was at minus 17 cents today. And as the capital market in Nigeria continues to grow, the role of investment bankers in connecting investors with investment is becoming more apparent. With the rise of inflation and currency devaluation, so investment bankers now have to do more in channeling investments to the right assets. This was the view of industry stakeholders as the Association of Issuing Houses in Nigeria held its Investment Banking Awards night in Lagos earlier this week. And for our first conversation now, we're going to be talking about drilling down on the inflation data that came out yesterday. That's in the moment. Do stay with us. And data from the National Bureau of Statistics shows Nigeria's annual inflation rate rose to 27.33% in October from 26.72% in the previous month. According to the report, the food inflation rate in October quickened to 31.52%. We also see forecasts of inflation coming at about 30% at the end of this year. Joining me now for this conversation is Ugo Dre, Obichukwu, CEO, Nairametrics. Join me via Zoom. Great to have you on the show. Good morning.
Same here. Morning.
So before we get into the inflation data, we see the Joint National Executive Council of the two leading labor unions, which declared the strike in Nigeria recently. That's the Nigeria Labour Congress and the Trade Union Congress. Everyone's talking about that, yesterday, but they've announced a suspension of the industrial action at the end of a meeting last night. What are your thoughts on this?
I think it's a good development. Nobody wants labor unions going on strike, especially when we all know the economy is in a precarious situation. It's one thing to ask yourself, how did we even get here? How is it that you have the leader of the country's labor union being beaten? Whatever the reason is, whether because he went to Imo State on political reasons or not, you don't want violence on any person at all, not to talk of someone who is a union leader. But I think the government has waded into this as quickly as possible. Probably shouldn't have gotten even to where they had to embark on a one-day strike. Also important to know that the people of Imo State have also gone days, if not weeks, without electricity because of this issue. So that obviously has impacted on the economy of that state. But I think government should try as much as possible to avoid issues like this. We don't want the economy grounded to a halt for issues that are largely political, not that it serves anyone in the larger scheme of things. Nigerians don't benefit from this, neither does the government. So I'm happy that this has been quelled, and let's just hope that we never see anything like this as we approach the end of the year.
Yeah, hopefully, because the strike culture quite apparent right here in Nigeria. But let's get into the data now. We've seen the US CPI slowed for October. In the UK, the same thing. We see a drop in inflation numbers. Then our neighbor right here, we see Ghana's inflation rate also dropped to about 35.2% in October, lowest in 14 months. Looking at the inflation numbers for Nigeria, why is ours going against the global trend right now?
It's a very good question, but there are different countries and different complexity and different issues. For Nigeria, if you ask, the average Nigerian, they would even doubt the current inflation numbers. For a lot of people, their personal inflation, it's actually a lot higher. But this is CPI, so the methodology is obviously different. Nigeria is still going through different cycles of reforms, and so for that reason, you would continue to see inflation sticky over the next few months. At 27.33%, that of course reflects some of the things that we've seen happen in the last few months. You've seen fuel subsidy go off, you've seen exchange rate continue to depreciate, and these are all pass-through items that often impact inflation rate. And so that is why it's likely going to remain sticky, like we've always said. But let's also remember that we also are experiencing some reduction month on month, excuse me, from 2.89% in July, and it rose to 3.18% in August. It has, however, dropped to 2.1% in September, and now 1.73% in October. That is month-on-month inflation. So on a month-on-month basis, we are seeing inflation rate sort of taper down, but on an annual basis, it's still rising. There is prediction or suggestion or forecast that we could hit 30% by the end of the year before things start to turn around. But Nigeria's situation is obviously different from Ghana. Ghana has gone through cycles of galloping inflation, hit their peak, and now they seem to be tapering down. That could also be due to base effects, and not like there's anything major that has happened in Ghana. Nigeria would also experience its own base effects at some point. But for now, I don't think that we've plateaued yet. Very likely to see a lot more higher inflation as we approach the end of the year.
Now, we know the CBN did say yesterday that they are happy with the slowing rates there month on month, for the inflation data for October. But would you say somehow there's some kind of light at the end of the tunnel, looking at inflation at this point?
I don't think there's light at the end of the tunnel yet. If you ask me, there's still a number of things that haven't come up yet. A lot of people are yet to reflect their prices. The exchange rate depreciation that we've seen between August, September, and October hasn't yet reflected on new inventories that will be coming in as we approach the Christmas season. So I think that you're going to see a lot more price increases, and that's why I said earlier that inflation is going to remain sticky up until even the first quarter of next year. Let's remember as well that they are yet to increase electricity prices, so that is also still being held down. And so long as that is held down, you're not actually seeing the true cost of doing business in Nigeria from an inflation perspective. So there's still a lot of headwinds down the line. Nobody still knows what is going to happen to crude oil prices as we move on. There are predictions that we could go past $100. Some people suggest that it could actually go lower as the global economy also starts to shake. But with the Israeli-Hamas war or Palestinian war, there is also fear that crude oil prices could go up as well. So if they do go up and exchange rate will continue to face exchange rate pressures, then it's difficult to think that there's light at the end of the tunnel, because fuel subsidy has been removed, and so that pass-through cost is going to come down to Nigerians. And when they come down to Nigerians, it immediately reflects on food prices, which, like you mentioned earlier, was above 30%. So I do not see an immediate, I don't see light at the end of the tunnel just yet, except for perhaps base effects. There's still a lot of things that the government needs to do to ensure that we don't go past 30%. Inflation rate at the turn of the year. It's very likely that we hit 30%, but staying above 30% is now left to the government.
Yeah, quite interesting. Can't wait to start reporting a slowing in our inflation rate, going forward. But yesterday, the former governor of the Central Bank of Nigeria, Mohammed Sanusi II, he said the CBN's lending to the federal government under the administration of former President Muhammadu Buhari through Ways and Means triggered inflationary pressure in Nigeria and weakened the value of the naira. Let me have your thoughts on this. And how do you tackle this kind of inflation, really?
It's very much correct. Let's recall that before we started seeing the central bank extend what would have been short-term loans to the government, money supply was nowhere close to 20 trillion. Today, money supply is 66 or so trillion, and likely to be even more by the time the central bank releases the latest money supply data. That, of course, means that there's a whole lot of money in the economy, and that also has affected inflation, by the way, and of course, exchange rate. Now, my own concern even is I was looking at the MTF, the medium-term expenditure framework of the government for the next 3 years, and even the 2024 budget. You still see elements of the same kind of economic policies that the Buhari administration had in the current administration. So they have gone for a wide fiscal deficit budget, and also they've also gone for revenue targets that you would look at, if you look at it in the sense of being a bit unrealistic. So when you have unrealistic revenue targets and you have wide fiscal deficit, then pretty obvious that the government might be looking at borrowing again. And we do know that it's pretty difficult tapping into the foreign debt market. You can keep tapping into the local debt market, which they've been doing, but for the size of revenue gap that they could face in 2024, they are likely going to go back to Ways and Means. It might not be at the level that we saw during the Buhari administration, but very likely that they could still tap into the Ways and Means. So that is a bit of a concern to me. And if you also look at that medium-term expenditure framework as well, they also did estimate or forecast that money supply will go past 70 trillion, almost 80 trillion over the next 3 years. And so those are things that you look at and you ask yourself, where exactly is the silver lining? How are they going to contain inflation when spending is going to keep going, at least at the federal level? There is argument that Nigeria's federal budget is not that huge compared to GDP, and of course when you compare it to other countries, and so the government does need to spend more, but you have to sort of situate it to Nigerian context. And right now you're trying to address inflation and weakening exchange rate. You don't address that by continuing with the sort of wide fiscal deficit budgets that the government is currently embarking on. So that's a concern for me. In terms of the CBN and what it might do, there's really not that much. inflation has always been driven by structural issues in Nigeria. It's always been, supply side issues. You talked about the US, you talked about Ghana, you talked about Europe. For a lot of these countries, it's always been demand related issues, and so monetary policy does work. So in Nigeria, it will work to an extent. I'm not saying that the central bank can't do anything. They still need to, you'll likely see MPR likely go up again. They need to also increase the interest rates so that that could also reduce the amount of naira that is chasing dollars. But beyond that, the government needs to sort out a number of things. We still have, energy crisis, if I can put it that way. Nigerians are still battling with, rising fuel prices, and so the government's plan to perhaps move into CNG as a way of powering transportation, they need to fast track that because so long as fuel prices continue to go up, people are going to find ways to push that cost to Nigerians, and that also adds to inflation. And then when it adds to inflation, that also leads to further currency depreciation. So that needs to be addressed quite urgently. Then, of course, there are also structural issues around ease of doing business. There's a lot of transportation bottlenecks. I'm happy now that the rains are almost over, and so the government can focus on fixing roads and then continue with all the infrastructure plans they've had with rails. People need to be able to move food from one part of the country to the other without losing a huge part of their products because of transportation issues or because of roadblocks or from security agencies that should actually allow things move. So they need to fix all the structural issues. Of course, you also have multiple taxation issues and corruption issues at some part of government agencies that do also add to rising cost of goods and services. So that needs to be addressed as well. And then finally, where the CBN can also come is the forex. They have put forward the so-called reforms that we all wanted them to do in terms of forex, but we haven't seen liquidity come in. Liquidity does need to come in. They're working very hard to ensure that we get FX liquidity. Until that is resolved, you're unlikely to see things sort of stabilize. If you get FX stability, where the exchange rate at the official market is sort of stable, not the kind of yo-yo that we're seeing at the moment, and then you get the black market rate also stable. And more importantly, the premium between the black market rate and the official rate, no more than 10% at the most. I think then we can start to see we're gradually turning the corner. At the moment, that is not happening. And so for me, these are the issues that I think need to be resolved quickly if we're to get inflation downwards.
So many issues to be addressed at this point, but it all lies on the new leadership of the CBN, at this time. Looking at ways and means, you still see this new leadership, lending to the federal government in a big way. And is there any chance for a soft landing for the Nigerian economy, going forward in the short term?
Soft landing, I wouldn't say there's a chance for a soft landing because we already had a hard landing, right? So it's just how do we evacuate ourselves safely enough, because this is a hard landing. You don't have a soft landing when you had the sort of exchange rate devaluation that we've had over the last few months. You don't have a soft landing when you've had fuel subsidy removed right away. There's just no soft landing there. So it's all been a hard landing. It's now how do we make sure that people are evacuated safely and then we recover very well, if I can use those sort of terms. But for the central bank, yes, like I mentioned, I do think that they will continue to extend loans to the FG via ways and means. Now, mind you, it is not illegal. What was illegal was extending beyond what was provided for in the law, in the CBN Act, which is 5% or so of the government's previous revenue. I hope that's correct. Yeah. So that is, so long as they fall within that ambit, and then the government also repays those loans, then it's fine, because ways and means is basically an overdraft against revenue that you're expecting. So I do see that happening, with this government. And by the way, some of the money that they've expended over the last few months, especially when they took over, was also ways and means. We heard that there was a 4 trillion or so, that was pulled out during the election period and when the new government came in. So it's very likely that might continue. It's a huge problem. Where are they going to get money from? Government needs to continue. So if they can't get enough money from crude oil, export, or from taxes, then they would have to resort to ease. I mean, good enough. We're seeing crude oil production output going up. We're gradually hitting, 1.4, 1.5 million barrels per day. But I hope that they can sustain that. And we need to be at 1.8 million barrels per day. It's a must. We have to be there by the first quarter of next year if we're even to have any glimmer of hope that we're going to get this sort of soft evacuation that you're looking for.
Yeah, definitely looking forward to that, soft landing, because the wallet is really hit hard at this time. Thank you so much for coming on the show, Ugodre Obichukwu, CEO, Nairametrics. Thank you.
My pleasure.
All right, now let's look at investment banking in Nigeria. Stakeholders did meet up earlier this week to discuss the issues with Nigeria's economy and how investment bankers are joining and connecting investors with asset classes. They had that event earlier this week. Do take a listen.
If you look at the overall capital market, just this year alone, in the last 1.5 years, we've seen over 1.5 trillion naira of transactions in the fixed income space alone between the bonds and the commercial paper instrument. So the investment banking industry remains a veritable tool for disintermediating investments between investors that have cash and companies and governments that need cash to fund growth or fund infrastructure development, which is why the Association of Asian Houses of Nigeria is a very critical anchor.
And for the commodities market update, join us now is Dr. Desola Simone, Senior Analyst at Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Ladi. Thank you for having me on the show this morning.
Yeah, so it's inflation reporting season right now, and I did remember FDC projected about 27.8%, but it seems the data beat your expectation a little.
Indeed, it was a famous statistician by the name George Box said that all models are wrong, but some are useful. Right, and our model is useful in the sense that we were correct in terms of the direction of inflation. We forecast at 27.8%, but the official reading came in at 27.3%. So in terms of direction, we were spot on, but we were just a little bit off in terms of the size of the increase. And like the previous speaker, Ugodre, said, that the big drivers was a food inflation as well as the pass-through effect of full subsidy removal and the exchange rate effect. We saw, and I must add that this is the 10th consecutive increase in inflation that we've seen this year, as well as the highest we have seen in 18 months. And I think at this point, there's a lot of pressure on the central bank and the new committee, the new members of the Monetary Policy Committee to address inflation quite squarely, because globally it appears that the fight against inflation is turning a corner. Like you said earlier, in the UK, for example, for October, inflation reading came in at 4.6 compared to like 6.7% in September. In the US as well, we are seeing inflation slowing to 3.2% from what it was before. And so globally, we are seeing inflation slow. Even in Ghana, inflation is 35% compared to 38% it was in September. So we are seeing inflation slow globally, and I think this is positive news because there's now a growing sentiment in financial markets that global inflation rates, global interest rates, I beg your pardon, have peaked, and then we are expected to start seeing a change in monetary policy stance starting from as early as spring towards summer next year.
And looking at the inflation number right now, and next month, we're all looking forward to festivities. Looking at this inflation number, the average consumer is spread thin, right now. Talk to me about how much can they take, at this time? How much can consumers take at this time, knowing fully well that just next month, Desola, I'm sure, Desola, you've already sorted out your Christmas. I'm sure you have all the funds you need, but most of us here are still really struggling. How much can we take really in Nigeria at this time?
That's a very good question, Laddie. Indeed, one of the consequences of inflation is a reduction in real incomes. And like you mentioned, as inflation is trending northwards, we are seeing real incomes depreciate. We are seeing real income decline. We are seeing switching substitutes. We're seeing people switch towards a cheaper substitute, and I think that's what's going to happen this Christmas. I remember during Christmas, for instance, if I want to give gifts to my friends, co-workers, etc., I could buy like bags of rice, 50 kg bag of rice, for example. But in this kind of high price environment, people could switch towards maybe 25 kg bags of rice, or instead of buying imported rice, they buy local rice, for example. Or I think that's what's going to happen for December. I think there's going to be some switching for those who can switch, and for those who cannot switch, I think it's going to be a dry Christmas, unfortunately. And this is also one of the consequences of the reform. It is well known globally. Wherever there's a reform, there's first of all suffering before things get better. So things get worse first before they get better. And one of the ways that the government could kind of help the situation is some form of social protection. I read this morning that the government in collaboration with the World Bank has started to disburse some money for social protection. They're coming up with a register of people who are most vulnerable to the reforms, people who are the lower end of the income distribution, for example, who are most vulnerable, and they'll begin to identify those people and to disburse some funds to them. So I hope that should help the suffering, but mostly what's going to happen is some switching. We saw that as well in the UK. Just last week, we saw grocery inflation, for example. Grocery store inflation declined in October to 9.7% from 11%. And one of the key drivers was people switching to cheaper substitutes. In the UK here, store brands, for example, buying a gallon of milk from Tesco, for example, Tesco brand is cheaper than buying other brands, or buying digestive biscuits, for example. The Tesco brand of digestive is cheaper than buying the McVitie's brand, for example. So we saw that switching in the UK, and that brought down grocery inflation. And I think that's what's going to happen as well in Nigeria. People switching due to squeezed real incomes.
Right, and talking about real incomes at this time, next week, I think we're all expecting Black Friday. That's for next week, and definitely consumers are going to be expecting loads of discounts, coming. Do you think businesses can meet the expectations of consumers when it comes to discounts?
At the end of the day, businesses are not charities, right? Businesses are in the business of making profits, right? So businesses, I think, would to kind of stimulate sales, right? Because, like you mentioned, prices are elevated at the moment generally, and so and because of prices are elevated, the willingness to pay of the marginal consumer gets smaller. So as price goes higher and higher, more and more people are priced out of the market. Essentially, their willingness to pay declines more and more. So I think what can happen is, some businesses can reduce some of their prices on some of their products to kind of just stimulate demand, particularly for goods that they're price elastic, right? So they are quite sensitive to price changes. So I think what can happen is that businesses, for some of their products where it is still profitable, they can reduce some of their prices so that to stimulate some demand.
Right. Let's hope consumers don't shun Black Friday coming up next week. We're talking about the global inflation trend, right now, seeing what's happening with US CPI, the UK, all coming in softer than expected. How does that play into the inflation importation story in Nigeria?
I think that's a really, really good question, Ladi. So why, because I was going to ask this question myself, why do we care about what's going on with inflation in the US or the UK? Well, we care about it because these countries are big trading partners. I don't remember the size of our trade at the moment, but these countries are big trading partners. And if, they're experiencing high inflation in their countries and we import from these countries, they were also importing part of this inflation into Nigeria. But in addition to the imported inflation, we also have a weaker, currency, which pushes prices even upwards. And as Igodre mentioned, inflation in Nigeria it has some room to go. We've not seen inflation peak yet in Nigeria, because many of the goods for December, for example, that were ordered in September and October at the relatively higher exchange rate, they're going to reflect in the prices in December, and that's also going to feed into inflation. But I think as globally prices are coming down globally, as inflation is tapering in the UK, in Europe, in the US, I think that imported portion of inflation would also begin to be transmitted also into lower inflation for Nigeria. But we have to remember that there is still the exchange rate pass-through effect. But I think in addition to all of this, one good news is that at least traders now, the sentiment in the market is that interest rates have peaked. So we don't expect higher interest rates anymore. And as a result of that, we are seeing a lot of investors dumping cash and going into bonds. We are seeing bond yields trend downwards, but the prices trend upwards. In Nigeria, for example, also we saw the stop rate of open market operation also trend upward. For example, a 365-day OMO bill is now around 18%, and I think that is positive in the sense that it will encourage some savings. Right, so reducing the cash in circulation, moving to savings, but also it might also begin to attract some foreign investment, which we need so dearly at the moment.
Yeah, I guess definitely investors globally are looking towards an end to the higher for longer story when it comes to rates at this time. Thank you so much. Great having your perspective, Dr. Desola Simoni, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you. Thank you for having me.
All right, and still, looking at inflation at this time, definitely that impacts the markets. Let's hear more now from Will Ibong on reaction to the inflation data that came out yesterday for October. And it seems like you just hit a new level. You don't really care about inflation.
I'm actually very surprised to say the more inflation gets higher,
right,
it's like the NGX is competing and just trying to break level.
Incredible.
Yesterday we just crossed our 71K level, and I'm wondering how high can we get now? And that 80K you're talking about, I think is getting closer, and I'm thinking the champagne is going to come out very soon because we need to pop it.
Yeah, we need to pop it, and I'm wondering maybe at some point when inflation starts coming down right here in Nigeria, what happens to the NGX? Is it some kind of inverse relationship?
Maybe, well, let's just see. It might be that the inflation, it might not necessarily affect equity markets, because investors will keep investing and playing where the market is, where they see the gains, where they see the yields. They're going to keep playing, and I'm sure inflation will not.
Investors here are just a different breed.
A different breed,
right?
Definitely. We see sentiments remaining positive in the equities markets. Investors took positions in Boa Cement has been trending up for some time now, for 2 days straight. Our all-share index rose by 0.25% yesterday to cross 71,000, and that's a new high for the NGX. 39 trillion for the market cap, great point for the market as well. We added about 113 billion naira to the market cap. Month to date and year to date still in positive territory, 2.6% and 38.6%. Now let's look at total volume traded yesterday. We see that dipped by 9.17% to 297.35 million units. We see value also dipping by 84.12 billion to 6.16 billion naira, and value also in the red, 5.52% down, 6,172 deals transacted yesterday. Now let's look at the sectors very quickly. We see banking down, consumer up, industrial up because of Boa Cement, insurance also down, oil and gas almost flat but in the green. But let's talk to Abdurrashid Momo, is equity trader at TLW Stockbrokers, to give us more insights. Good morning, Abdurrashid.
Good morning.
Abdurrashid, we've seen the ASI now crossing 71,000 level. Please just give me I just want to know, how high can we get now? 80K is not far off now. What are the resistance levels we need to break now to hit 80K?
80K is a long way to go. Oh, not. The only thing I can say is that I think on the 13th of November, you know, after we broke the 70,000, 13th of November, the market actually hit our new high of about 71,136. You know, and it went to about 70,000 plus. But as we speak now, the market is still below 71,136.14. It's a minor resistance level to actually break. As we'll see, it's a continuous bull trend. We've been waiting for a correction. There's no correction so far. So the only thing I'll say is that we should just keep enjoying the bull run. But for every bull run, there will always be a correction. We've not seen any correction so far, and that actually calls for concern. But that's for the short term. But in the medium and long term, the market is still very, very bullish. Even in the weekly term, if there's a reversal within this period, we expect market to hit more highs. But for 80K, from what Ladi has been saying, it's slow and steady. 80K is about, you know how many? We're talking about almost 8,000 points. You know, 8,000 points is a long way to go. But from what we've seen, is a staircase for formation. We'll see a rise. We'll see some sort of consolidation before the next rally. Even if you see the market now, it's been after the last trend we saw from October 30th to about 1st of November. We have not seen any major rally since. There's just been little points up and down. So I think it's for now this rally is more of consolidation. There's no major spike so far.
Okay, so you talked about some concerns in the market in terms of the correction that we've not seen yet. What are the things you see in the market that would raise these concerns?
Yeah, you see, the way the market is, if you look at most of the stocks trading now, especially the banking sector, you see that despite the fact that the prices are stable, we have more offers than bids, you understand? So I think the sellers are not willing to sell lower, and the buyers are forced to actually buy at the seller's price. For example, if you look at the market now, we'll see stocks like, let me even start from the banking, we'll see stocks like UBA. UBA overall is about 9 million against 21 million. You expect the prices to come down, but it's a steady growth. No, the sellers are not willing to go down. You know, if the sellers are willing to go down, this will actually help the market in rallying. So as it is now, it's not even a trader's market, it's more of an investor's market, because traders enjoy when markets move up and down, but as it is, it's just flat. So there's no room for traders to make money. The only areas traders are making money might be, let's say, the penny stocks. Like you see stocks like Omatech have been moving lately. We see stocks like I think John Holt and the rest. So then in terms of volume, those are the big players. You see the banking, the oil, they're all there. Example now, I think Owando yesterday gained about 10%. As that this morning now it's on full bid again. They traded about I think the last time I checked, they traded about 20 million. Okay, now they traded about 25 million units. It's on full bid. So for now, Owando has joined the ratio to help the index in going up, but apart from that, the market is generally flat.
So would we say that Owando's uptrend is due to that signing, that deal they just signed with Afrexim Bank? That's about a day ago. Would you say that's the reason why we're seeing people bullish about Owando at the moment, saying that it's planning to delist from the NGX anytime soon?
That's the problem. We've heard so many stories on Owando. They went to delist. Yes, we've heard that, and now from being delisting, they said they were going to transport, which you've seen the electric buses within around Lagos. Then the next thing we saw them acquiring shares in RG, you understand, and now with the loan they've gotten from Averexim, that is what the market is generally the market, information driven, and that's what's happening to Owando. In terms of the listing, we don't know when that's going to be. So for now, people are just enjoying the rally, because one thing about Owando is the only stock in the oil sector that is actually very liquid, very, very liquid, unlike the others where the floats are not really much. So for investors, yeah, it's a good way to make money. When the listing hits, when that finally comes, we'll cross that bridge. But for now, investors are enjoying the trend.
So good investors are enjoying the trend. We do hope traders get something, from the penny stocks that they're trading and, be able to make some.
Traders are actually enjoying this now, you understand? Because a client actually asked me that with this new deal with Owando, are they acquiring more shares? I said no. Owando is not acquiring more shares. Owando, the market is only reacting to the information that came out, and that's why the price is going up.
Okay. Thank you so much, Abdul Rashid Momo, equity trader, TRW Stockbrokers, for breaking that down for us. Thank you so much.
Thank you very much.
So, Ladi, Owando.
Yeah, full
bid still right
especially
now.
For Secure Industries, Owando, I'm sure traders that can't get their hands on those stocks.
They can't get it. Little supply,
right,
but they just want it anyways, and that's why the price keeps going up, Ladi.
Quite incredible. Thank you so much, Will, for the update on the markets there. Well, let's get a check on the UK now. We have Juliana join us from our London studio. Great to have you, Juliana. Good morning. So we see state-owned delivery service provider Royalmail reported £319 million a half-year loss, and they're blaming the economy and strikes.
Yeah, that's absolutely right. Good morning, Laddie. So this is International Distribution Services Limited, which isn't state-owned. It's actually a private listed firm, which is the parent company of Royalmail. They have reported this morning, as you quite rightly said, 6 months losses of £319 million, which is not great, but it's coming to be the typical story of Royalmail, which has really suffered over the past couple of years, before the pandemic, during the pandemic, and now post-pandemic. Now, they have blamed the economic environment in the UK at the moment, but there are so many other factors that are contributing towards these losses. Royalmail have really tried to kind of revamp and re-strategize their consumer delivery, because, of course, it's all changed since the pandemic. Most people don't really send letters anymore. Lots of people who want to get in touch with people, of course, using social media services or email, and that was where the significant losses began. And then, of course, people who were locked up in their homes were using online delivery services rather than Royalmail to get items to wherever they wanted to go much quicker. So I think that's the direction that Royalmail want to go into, but it is taking some time. And if we cast our minds back as well to this time last year, there was significant industrial action across multiple sectors in the UK, but particularly for Royalmail staff. They staged, I believe, a 6 or 8 day industrial action walkout, which began during Black Friday last year and led up to Christmas. And of course, Christmas, if there was a time people were going to be sending letters and Christmas cards, that would have been the time, and they were just unable to do that because of the industrial action. Lots of these losses as well are to do with very painful negotiations that bosses at Royalmail went through with the Communication Workers Union, which were the union looking after their employees. So there are multiple factors that have led to this 6 month loss. And then, of course, they were also fined last week. They received a fine from the regulator Ofcom because they failed to hit some of their delivery targets. So yes, really embarrassing trade report for their shareholders. £319 million in the 6 months to the end of September, which is why one of the biggest losers on the UK blue chip index is that parent firm, International Distribution Services Limited.
Right, International Distribution Services, they're taking a hit. Thanks for that correction there, Juliana. So, but we see Meta, TikTok, they're challenging EU's crackdown on big tech dominance. How are you seeing this?
Yeah, it's an interesting story, actually. In fact, Meta, which of course is the parent firm of Facebook, Instagram and WhatsApp, many others too, they are the big Silicon Valley tech firm to try and battle with the EU. So it's going to be interesting to see how this plays out. This is all about the Digital Markets Act, which has been in the oven for several years now, but I believe it's actually become law just a couple of months ago. Basically, what the DMA does is it provides the do's and don'ts online for some of these big social media firms who we know have dominated the internet over the past couple of years. But I think what the EU are concerned about and what the Digital Markets Act prevents is from these firms using our algorithm to basically sell our products and be gatekeepers for other organizations that are also trying to sell. So when it comes to Meta, we're talking about the Facebook marketplace. You can only have a discussion. You have a discussion these days, laddie. You check on your phone, exactly what you're discussing is available to purchase. It's completely crazy with what's going on with artificial intelligence and cookies. And I think that's what the EU want to prevent, because of course if you go into the Facebook marketplace, you want to be able to see a wide range of options. But I believe the bloc are accusing companies like Facebook, like Google, Alphabet Inc., like Amazon from preventing consumers to do that. So again, if you was to go into Amazon, you're more likely to see on the first page all of Amazon's choices or Amazon's options rather than seeing all of the options that are available. So Facebook, Meta, are going to be taking them to court. They're appealing the ruling, and I believe as well TikTok, the Chinese owner of TikTok, ByteDance, they're also not happy with some of the rules that the EU are trying to clamp down on. So let's see how it goes with these big techs. But yes, Meta, first big company in Silicon Valley to try and battle against the regulators.
Right, Juliana, I keep saying that these phones, these gadgets, they're definitely listening. Thank you so much, Juliana, for the update. Thank you.
Thank you. Thank you.
All right, so now let's take it to the markets now. We'll see Bitcoin there. Big jump this morning. We see that big deep green. Looking at coin 360, showing us the color in the market right now is deep green for Bitcoin. More deeper than we had yesterday. It was mostly red yesterday. And we see Ethereum holding back above that $2,000 level. Solana, again, this one's on fire. Deep green, just like a Bitcoin. Let's look at the sentiment in the market now. Let's see how greedy the market is. The crypto market, 70 points compared to about 60 points yesterday. So it's still a greedy market right now. More greed. We're seeing investors getting more bullish in this market. Let's look at the top cryptocurrencies we track. We see Bitcoin, $37,500 at 8 a.m. this morning. Big 5.32% jump. Ethereum not left out. Back above that psychological level of $2,000. BNB also not left out of the action. There's $253. Looks like it's heading to $300 at this time. Cardano, 38 cents. Big 6.47% jump. And we see XRP also still being listed in some of these exchanges, getting back on the exchange. And we see investors loving this with XRP at this time. Let's bring in Shehu Daniel, now CEO, TradeFather, to bring us up to speed. Great to have you on the show. Good morning.
Good morning, Laddie. How are you doing?
I'm doing great. So looking at XRP there, we're seeing a bullish sentiment. Another win for the XRP ecosystem is being celebrated right now. They've been allowed to be relisted on some exchanges, and we see some exchanges actually listing them back. Is there any risk for this relisting that we're seeing of XRP to the exchanges?
Well, there's always been risks, but right now, because the regulator, the SEC, has been very, very strict, they are not allowing, the exchanges to list XRP. So, right now, the exchanges are in July, there was a ruling given by the court in the United States, declaring XRP as not a security. People are now exchanges are now more confident. They're taking their time to understand what direction the SEC will be going with XRP, and they've seen that it's positive. And of course, there's a huge demand for XRP, and it's only going to bring in money for the exchanges. Worst thing that can happen there's what you call a legal opinion, worst case scenario, that you will do personally as an exchange in order to list a particular product, and that legal opinion will state categorically, using several methods, if a particular asset is a token or a security, and you can now determine how or when they should list it. And of course, I know most of the exchanges would have taken that route, and they've been able to de-risk as much as possible. So yeah, it's a big win for XRP. There's more increased adoption, increased availability to several users across the world.
Yeah, I'll definitely keep tracking that XRP. But looking at the exchanges now, there's data showing that we've seen inflows of about $1.2 billion in the past month of Bitcoin into exchanges. So they're depositing Bitcoin in the exchanges. What is this signaling?
So it signals both bullish and bearish sentiment in the market right now, because contrary to several years ago when we could just measure and analyze exchange flows as people trying to sell off, now there are so many other things that people could do with their Bitcoin. So a lot of people depositing Bitcoin could want to participate in DeFi or staking activities. So a lot of exchanges offer staking, where you can deposit your Bitcoin and you can then stake it to be earning rewards. And also, you can also do margin borrowing. You can deposit your Bitcoin. If you need money, you can deposit your Bitcoin and then borrow maybe some other stable coin off it. And there's also the part where people are also looking, as you show in the charts, there are other, people are trying to diversify into altcoins. People are seeing, the likes of Solana that have been performing very, very well over the past couple of weeks. So people are looking to diversify into other altcoins. So what it is, bullish in terms of there's increased demand, because whatever it is, those who are selling to people. And it could also be bearish if you're having very huge holders who are selling off, and then that increases the liquidity in the market and the supply. And definitely we know that when the supply is very high, the prices will definitely reduce. But generally, I think we're in a bull market. We're all bullish for Bitcoin.
Yeah, quite bullish, and a very interesting story with Solana there. When FTX had that issue, I'm sure some traders thought Solana was dead, but I guess it's back. Yes. Thank you so much, Shehu Dania, CEO, TradeFadder. Thank you.
Thank you very much for having me.
All right, let's look at the top gainers now. This morning, Render token is top of the counter, up 34.58%. Not seeing this kind of gains on the top trades, top gainers in a while. Double digits, high end 34.58%. AVAX not left out there. That's $21.20. Big 20.94%. Showing that this market is really, really bullish right now. Let's look at the top losers. Let's see who's topping the losers counter. We see Matic as a profit taken on Matic, even though a single-digit loss of 3.38%. And we see XMR also in that list, $161.52, down 1.11%. So we're seeing a lot of bullish sentiment right now in the crypto space, and hoping traders can manage that FOMO right now. So that's the show today. Thanks so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And you can visit www.channelcv.com for more updates. Thank you again for watching. I'm Ladi Williams. Have a profitable day.